All right, guys, what is up? Happy Tuesday. It is November 8th. It's about 11 o'clock in the morning. And what I have for you guys today is a trade that I took on gold. I got in about 4 o'clock this morning, Eastern Standard Time. And within 6 hours, I was able to generate about $5,330 just following our rules. So be sure to watch this video right now that I'm about to show you. And I'm going to explain exactly everything that I did and why I did it for this particular trade. These are trades we make all the time here at Trading Price. Enjoy. All right, guys, so when I'm looking at getting into a position, the very first thing that I consider is the trend. And gold, if you look at a monthly chart of gold, you can see that gold's been down 1, 2, 3, 4, 5, 6, 7 months in a row. So very bearish trend that we've got going on here. I also know that gold hasn't been down 7 months in a row since something like the 70s. So it's been a very long time since we've had gold fall from gold fall 7 months in a row, A, but B, 1943 all the way back down to 1636. And so as traders, we have to say, okay, we have to trade with the trend this entire way down, right? That's what we do. But when we see this new low put in place, and I want to point out a couple different things here about this low, which is a little bit confusing, but what we have here is our first low, and then the second low, which makes a lower low in price, and we have from our indicator, it tells us that we're also weaker on the momentum that we've got going down. So that's not positive divergence. That's not what we're looking for. So that's the first one. On the second one, we can see that we make an even more aggressive low that we've got here. And on our indicator, we go from 30 on the RSI down to about 29. So a slight decrease in the RSI, which suggests that we should be moving down. So there really hasn't been a trade here on gold until we've had this move. And I'm gonna pretend like we don't know what happens here. But until we had this move, where we broke a lot of previous areas of resistance, this wick high, a couple more wicks over here, and we came back up and we matched this area on 690, but we blew by this drop-based drop that led to new lows. So there's definitely some momentum coming into the market. So when I see this type of move is what is associated with kind of bottoms. And when we go from 30 on the indicator, on the RSI, to 71, that is not a normal move in such a short time frame. So when we get that, I immediately start getting my gold bugs out, and I'm saying, or my bullish, I said gold bugs because we're looking at gold. My bull bugs out, because when we have that type of move and we breach past some critical areas, 1, 2, 3, I'm saying, okay, there's a lot of buying pressure that's originated from here, and that we're not likely to get a pullback all the way for an area of opportunity. So what I do, and I'm on a 4-hour chart now, we got to pretend like we don't know what happened here, but I'm going to show you how we made the trade and what we did. So on a 15-minute chart, what I did was I came in and I immediately tried to find existing levels that match our 7-level odds enhancers. And what you can see is that's one of the areas that we decided was one of the critical areas, and you can see that, you know, here this happens to be one of our 5 stacking the odds studies on top of our level odds enhancers. But from here we go rally, base, rally, 1, 2, 3, big move away. Not the best follow through on price, but still a big move away that gets us above this pivot high earlier. And we tried to come back down on Monday at 2 a.m. But what happened this morning, and right now it's 10:55, at 4 in the morning, we came into this level and I bought. And the reason why I bought was because of A, we are in an uptrend, and B, what we have here is a low in place, whoops, need to get a different drawing tool. Sorry. We have a low, then we have a lower low in price. But on the indicator, we have a lot higher momentum on the indicator, and this is what's called positive divergence. And when we have positive divergence in an uptrend, we are likely to move towards the direction of the trend. And that's exactly what happened here. So what you can see, and again, we're gonna pretend like we don't know what happened, and this is what I saw this morning at 4 o'clock when I got up, was a rally, base, rally, and then we kind of go a little bit sideways, right? Through Sunday, we come back down, and then during Monday, we kind of peter down into this area, which leads us well below 40 into this area. And one of our rules is we don't want to take trades when they come to the level below 40 unless we have the divergence that we need. And right here you can see we have a low and a lower low, and on the indicator we have the divergence that we need to get long. Now, because we are still below 40 on that, we took a smaller position on gold, only 2 contracts on the full size GC, and this is what happened here, right? Now we had an 889 cross, so we knew we were gonna run into some resistance here around 1675, and you can see price kind of went sideways, back and forth, back and forth, back and forth. We're still in the trade, right? And then once we get halfway to our target, right about here, when we broke out here, we moved our stop to break even. So no matter what happened with price, about, I don't know, what is that, 5 hours later? No, yeah, about 5 hours later, we were in the trade for free no matter what happened. And that's one of the things that we really try to do here, guys, is we really try and reduce the risk in trading. And we do that by moving our stops accordingly based on what the rules tell us to do. But nonetheless, we didn't need that, because even though we moved our stop to break even, you can see price hit our T1, and I'm gonna back this down even further, because we hit T1 at about 10 o'clock in the morning. And that basically meant that we had guaranteed, no matter what, $2,000 on the day or something like that. I can't remember exactly. So we took one off, and what we did was we implemented a kind of a trailing stop strategy that we've got going on, and but we didn't need that because price skyrocketed to our second target. And guys, with that, you can see $5,330 on about an $800 risk for 2 contracts, right? Maybe a little less. It's actually a little bit less than that. So maybe $720 risk to make a $5,330 profit. And of course, obviously, I wish we would have put on more position sizing than just the 2, but because of the rules that we have, it limited our loss potential, and we were still able to make, I mean, it's 11 o'clock on a Tuesday, guys. In the day, it could be done. You know, we don't have to trade anymore and still make our day. Or, you know, for some people, maybe even your week, right? So what we can do is look at what we can learn from this. Now, again, we are in, let's write this out. Number 1, we are in an uptrend. Number 2, we have a solid rally, base rally in the uptrend. And all of our 7-level odds enhancers help understand what that means, guys. 7-level odds enhancers. So number 3, we have multiple stacking the odds studies in place. And that's also part of what we teach here at Trading Price, is the stacking the odds studies. How we want RSI, how we want fibs to look. Do we have critical areas? All of those things are some of the things that we look at. And then number 4 is divergence and targets are key. So we've got divergence into the trade and targets out of the trade. And we use a lot of our stacking the odds studies and different exit strategies to determine where our targets are. So there's a reason why we have these arrows here. And I'll just tell you guys, I mean, this is Friday's close right here, and this was Monday's high. So you know there's some selling pressure right here that we have to take account for. And it's more than 3-to-1 on our reward to risk. And then up here we used actually Fibonacci extensions. And both of them actually come out for Fibonacci extensions and match up to where we want our targets to be. And we took our profit just a little bit short before starting to have a little bit of a pullback. But that's not a bad start to your Tuesday, guys. So I hope you enjoyed this teachable moment. I hope that this gold trade makes sense on kind of what we're looking at here on trading price and kind of how we do what we do. And guys, with that, take it easy, and I hope you have a fantastic rest of your Tuesday. All right, guys, take it easy.